You want to know the real secret to making big money in the market. It isn't in chasing the little moves or trying to pick up crumbs that fall off the table. The real money is made when you catch the big swing, when you get in before the crowd knows what's happening, and you ride it for all it's worth. Do you follow me? That's where fortunes are made, not in scratching around like a chicken for pennies. Most people don't have the patience for that. They want action every day, every hour, every tick. They feel nervous if they're not trading. But I tell you, the man who always needs to be in the market is the man who loses his stake before he ever sees a real move. Haven't you noticed that? He spends his time jumping in and out, buying here, selling there, but when the real trend shows its face, he's already too tired, too broke, or too stubborn to take it. That's the tragedy of most traders. They waste themselves on noise and miss the music. Now let me tell you something. A big move never comes without warning. The market always tips its hand if you know how to read it. Prices don't just explode without laying a foundation. Have you ever seen a house go up in one day? No. The builders spend weeks digging, pouring concrete, laying bricks, building a frame. It's the same with stocks. A big rise or fall is always built on some kind of groundwork. Maybe it's accumulation by strong hands, maybe it's distribution at the top, but it's always there for the man who watches. Are you watching, or are you just looking at prices like a gambler watching dice? Most traders, they get excited when they see a sudden jump. They think, here's the start of a move, and they rush in. But what happens? The stock stops, retraces, shakes them out, and they curse their luck. But it wasn't luck. They were blind to the groundwork. A sudden spike is just noise unless it's part of a bigger structure. Do you see what I'm saying? The money isn't in being quick, it's in being right. I used to sit in bucket shops when I was a boy, writing prices on the board. I watched men come in every day, betting nickels and dimes, then dollars, then more. And I watched them lose. They all thought they could outsmart the market by being clever, by guessing. But the few who lasted, the few who made something, they had one thing in common: they waited. They let the move show itself. They weren't in a hurry. They caught the trend when it was just beginning to roll, and then they held on with both hands. Do you have the patience to do that, or do you need action right this minute? I'll tell you what kills most traders: impatience. They can't sit still. They get bored. They feel they're missing out, so they jump in too soon, or they sell too early. Haven't you done that yourself? You buy a stock, it goes up a few points, and you think, that's good enough, I'll take it. Then you watch it run another 20 points without you, and you curse the market, but the fault isn't the market's, it's yours. The big money isn't in the little move, it's in the sitting, in the waiting, in the catching of the big swing. The hardest thing in this game isn't knowing what to do, it's doing nothing when nothing should be done. Think about it. Everybody thinks trading is about action, but the best traders I've known spent most of their time waiting. Waiting for the right setup, waiting for the line of least resistance to show itself. Do you understand what I mean by the line of least resistance? It's the path the market wants to take, the direction in which it meets the least opposition. When you see that, you don't have to push. You just go along for the ride. Are you looking for that line, or are you fighting the tape every day? Let me give you an example. Suppose a stock has been drifting sideways for weeks. No action, nothing exciting, just a dull range. Most people get tired of watching it. They say, this stock is dead, let's move on. But then, quietly, the volume starts to change. You see bigger orders on the buy side, but the price doesn't drop. The selling dries up. Day by day, the pressure builds. That's the groundwork. That's the foundation for a big move. The stock is being accumulated by strong hands who know more than the public. Now, if you're watching, if you're patient, you'll see the stock begin to lift. Not all at once, but steadily, persistently. That's when you get in. That's when you catch the start of something big. Haven't you seen that happen before? Only you were too distracted to notice. The same works on the downside. A stock doesn't collapse without warning. It tops out, it grows tired, the rallies get weaker, the volume shifts. The smart money distributes while the public still thinks it's strong. Then one day, the floor gives way. The decline is sudden to the crowd, but to the trader who watched, it was no surprise. Are you preparing yourself to see those signs, or are you still dazzled by sudden moves that don't mean anything? The real trick is to train your eye, your instinct, to recognize the difference between noise and signal. That takes time, and it takes losses. Don't think you can avoid that. Every man pays tuition to the market. But if you learn from it, if you discipline yourself to wait for the real setup, you'll be ahead of 90% of the crowd. Isn't that worth the price of patience? I remember one time, years ago, I was watching a certain stock. It had been in a range so tight you could hardly make a dime on it. Everybody lost interest. The talk was that it was dead money. But I noticed something. Every time it dipped, it came back faster. The buying was quiet, but it was there. I waited. Day after day, I waited. Then, without any news, the stock started to climb. Slowly at first, then stronger. That was the beginning of a run that carried it 20 points higher. I didn't buy because of tips or news. I bought because I saw the groundwork. Do you see how different that is from chasing? And yet most men would rather chase. They hear a tip, they see a sudden move, and they rush in with both feet. Then they get shaken out, or they buy the top, or they sell the bottom. Haven't you done that? I know I have, plenty of times in my early days. But the market punished me until I learned to stop guessing and start watching. The market doesn't hide its intentions, it shows them, if you have the patience to see. You must understand the big moves are where the real money is. One good swing can make your year. One well-timed trade, held through the whole move, is worth more than 100 little scalp trades. But the crowd never learns. They can't stand to wait. They want to eat their dessert before the meal is cooked. And the market, being what it is, feeds on their impatience. Do you want to be like them, or do you want to be among the few who catch the big moves before they start? Big moves in the market never come out of thin air. That's something I had to learn the hard way, and I'll bet you've seen it yourself, though maybe you didn't recognize it at the time. A stock doesn't just wake up one morning and decide to run 20 points higher or drop into the cellar without some sort of groundwork laid ahead of time. The groundwork is always there. It may not look like much when you're staring at the ticker, but it's the foundation under the surface, the quiet building that tells you something big is coming. Have you ever stopped to notice it? Or do you get caught chasing the fireworks when they finally go off? What do I mean by groundwork? I mean the period of preparation before a real move. It's the accumulation before a bull run, the distribution before a collapse. It's the time when the smart money is positioning itself while the crowd is bored or distracted. Think of a builder laying a foundation for a skyscraper. You don't see anything impressive when the concrete is poured. You see dirt, you see machinery, you see men sweating and digging. But without that base, the skyscraper never rises. In the market, it's the same. The big moves are built quietly, slowly, and most traders ignore them because they want the visible action. But the groundwork is the real clue. Do you look for that, or do you wait for the headlines to tell you what already happened? I used to fall into the same trap. I wanted the quick jumps, the sudden action. I thought if a stock moved 5 points in a day, it meant something. Sometimes it did, but more often it was just noise, a jolt to fool the impatient. The big professionals know this. They shake the tree to see who falls out. They take advantage of the crowd's hunger for excitement. But while the public chases the moves they can see, the professionals are preparing for the moves that are still invisible. Which side do you want to be on? Let's say a stock has been moving sideways for weeks. No excitement, no tips, no news. It trades in a range so narrow that most people forget about it. That's when the groundwork begins. If you watch closely, you'll notice the volume. Not the noisy volume of a panic, but the steady hand of accumulation. Every dip gets bought. Every time it looks like the stock will break down, it recovers with ease. The price doesn't go anywhere, but the character of the trading changes. Have you ever seen that? Have you noticed how a stock that seems dead refuses to die? and instead it's slowly building pressure. That's the foundation. That's the strong hands absorbing supply, picking up everything the weak hands throw away, and it doesn't show up in headlines. It doesn't show up in tips from brokers. It shows up in the tape, in the price action, in the stubborn refusal of the stock to sink. The groundwork is being laid, brick by brick, and the man who is patient enough to see it has a chance to catch the move before the crowd even knows it's happening. The same thing works on the downside. A stock doesn't collapse in one day unless it's already been weakening for weeks. You'll see the rallies get shorter. You'll see the volume come in on the down days, not the up days. You'll see distribution, the steady unloading of stock by those who know what's coming. The price might look strong to the untrained eye, but the groundwork for the fall is being laid just the same. Haven't you seen a stock that still looks healthy on the surface, but somehow feels heavy, sluggish, like it's running uphill? That's groundwork too, only this time for the bear move. You might ask, why is groundwork so important? Because it tells you the truth about the market's intentions before the move becomes obvious. Most people are late. They wait until the headlines confirm it. By the time the newspapers shout about the boom, the real money has already been made. By the time the tipsters are talking about the crash, the smart money has already sold out and gone short. The groundwork gave them the signal long before. Do you want to trade with the crowd, or do you want to be ahead of it? The trouble is, groundwork doesn't excite the average trader. It looks boring. It feels like nothing is happening. But isn't that the market's best disguise? The real work is done while everyone else is asleep or distracted by some other stock that's jumping around. The quiet phase, the uneventful period, is where the next fortune is being prepared. If you can train yourself to love the boredom, to study the dull tape, you'll see what others miss. Can you do that, or will you keep running after noise? I remember watching a stock years ago that sat in a narrow range for months. Most traders called it dead money. But I noticed the buying. Not loud buying, not spectacular jumps, just steady, persistent absorption. Every weak spell was met with quiet strength. I didn't rush. I let it build. When the breakout finally came, it looked sudden to the crowd, but to me it was the natural result of months of groundwork. That move ran farther than anyone expected, and I caught it from the start because I respected the foundation. Wouldn't you rather be in at the beginning than chasing after everyone else? Groundwork also tests you. It tests your patience, your discipline, your ability to wait when others are restless. It's easy to jump at shadows, but it's hard to sit still while the market builds its case. That's why most men miss the big moves. They don't have the stomach for the quiet. They can't stand the lull, so they trade themselves out of position. And when the move comes, they're too tired, too broke, or too distracted to take advantage. Haven't you done that? Sold too early, or wandered off just before the real move began? Think of groundwork as the coiling of a spring. The longer it coils, the more power it has when it's released. But if you don't recognize the coiling, if you only see the sudden release, you'll be too late. The professionals are the ones winding the spring, preparing for the explosion, while the amateurs are still looking elsewhere. The groundwork is the clue that tells you to be ready. Without it, you're gambling. With it, you're trading with foresight. And here's the truth. Every big move, without exception, leaves footprints in the groundwork. Sometimes the footprints are faint, sometimes they're clearer, but they're always there. The market never hides its intentions completely. The crowd doesn't see it because they're too eager, too impatient, too easily fooled by the noise. But if you slow down, if you watch carefully, the groundwork speaks. Are you listening, or are you just reacting to what everyone else reacts to? I'll tell you, the man who learns to study groundwork will always have an edge over the man who waits for news, because by the time the news comes, the groundwork has already turned into a full-fledged move. The professionals are already in, the crowd is rushing late, and the easy money is gone. Wouldn't you rather be among the first, instead of among the last? The market always has a line of least resistance, and if you don't learn to recognize it, You'll spend your days fighting battles you can't win. Think of water running down a hill. It doesn't go straight through the rocks. It finds the cracks, the channels, the low places where it can move without effort. That's the line of least resistance. Prices in the market work the same way. They move in the direction where there's the least opposition. Haven't you noticed how some stocks push ahead as though nothing can stop them, while others stumble and sink, no matter how many people swear they're undervalued? That's the difference between going with the line of least resistance and trying to fight against it. Every great move I ever made was because I found that line and followed it. I didn't invent it. I didn't force it. I just recognized where the market wanted to go and went along for the ride. That's the essence of speculation, not trying to tell the market what it should do, but letting the market tell you what it will do. Are you listening to what the market is saying, or are you too busy arguing with it? The mistake most traders make is believing they can impose their will on the market. They buy a stock because they think it's cheap, or they short it because they think it's high, and then they spend their time waiting for the market to agree with them. But the market doesn't care about your opinion or mine. It goes where it wants to go, along the path of least resistance. And if you try to stand in its way, you'll be crushed, no matter how right you think you are. Haven't you done that? Held on stubbornly to a stock, swearing the market was wrong, only to watch it run farther against you than you ever imagined? When I talk about the line of least resistance, I don't mean just price alone. I mean the character of the market, the way it behaves. A stock that rises easily, that advances on good volume, that shrugs off selling pressure. That stock is showing you its line of least resistance is upward. You don't need to ask for tips or rumors. The tape is telling you the stock wants to go higher. On the other hand, a stock that falls heavily on small selling, that can't hold its rallies, that feels heavy every time it tries to lift, that stock is showing you its line of least resistance is downward. Do you see how simple it is when you stop arguing and start observing? It takes discipline to accept this. Most people don't like to surrender their opinions. They want to be right more than they want to make money. They'll fight the trend. They'll tell themselves the stock is undervalued, or that the news doesn't justify the move. But the market doesn't listen to arguments. It shows you, day by day, where it wants to go, and the man who is wise enough to accept it and trade in that direction will prosper. Which kind of trader are you, the one who fights, or the one who follows? Let me give you an example. Suppose a stock breaks out of a long, dull range and starts to climb. Each pullback is shallow, each rally is stronger. The volume comes in on the up days. The resistance levels fall away as though they never existed. That's the line of least resistance upward. The market is telling you where it wants to go. If you're smart, you buy. If you're stubborn, you short because you think it's gone too far. And what happens? The stock keeps climbing because resistance is gone. How many times have you seen that? And how many times have you been on the wrong side of it? The same thing applies in a bear move. A stock may look cheap compared to last month or last year, but cheap is a dangerous word in speculation. What's cheap can always become cheaper. When a stock is falling easily, when every rally is feeble and met with heavier selling, the line of least resistance is down. That's the time to sell or stay away, not to hope for a bargain. Haven't you bought something because it looked cheap, only to watch it cut in half again? That's what happens when you ignore the line of least resistance. The real trick is to stop thinking in terms of what should be and start thinking in terms of what is. The market always knows more than you or me. The professionals, the insiders, the strong hands, they act before the public ever hears the news. Their buying or selling creates the path, and the tape records it. All you have to do is recognize which way the current is flowing and step into it. That's how you catch the big moves before they become obvious. Do you want to argue with the current, or do you want to ride it downstream? One of the hardest lessons I ever learned was not to anticipate the turn too soon. I used to think I was clever by trying to pick tops and bottoms. I'd short a rising stock because I thought it had gone far enough, or I'd buy a sinking one because it looked cheap. More often than not, I lost. The market doesn't reverse just because you think it should. It reverses when the line of least resistance shifts. Until that happens, the path remains the same. So the job of the trader is to wait until the market shows the change, not to predict it in advance. Have you been guilty of that, trying to outsmart the turn, only to find you were too early every time? Patience is what lets you see the line clearly. If you rush, if you jump at every movement, you'll confuse noise for direction. But if you wait and let the stock show its character, you'll see whether it wants to go up or down. The line doesn't lie. It may take time to reveal itself, but once it does, it carries tremendous power. That's why the biggest profits come when you align yourself with it and stay there until it changes. Do you have the patience to let the market prove itself, or are you still anxious to guess before it's ready? Think of a river. The current flows in one direction until something changes the landscape. Rocks shift, a storm swells the water, a new channel opens. Until then, the water doesn't reverse just because you stand on the bank and demand it. The market is no different. It keeps flowing in its chosen direction until the forces behind it change. Your job isn't to predict the storm, it's to observe the water and act when the shift shows itself. Isn't that a more sensible way to trade than trying to fight nature? The line of least resistance is also what protects you from stubbornness. If you respect it, you won't waste time holding losing positions. If the stock is going against you easily, with no effort, it means the line is against you. The wisest move then is to admit it and get out. The man who clings to hope instead of the tape will lose every time. The market doesn't care about your hope. It cares only about its own path. Will you cling, or will you step aside? I've seen fortunes lost because men couldn't recognize when the line had changed. They were right for a while, making good profits, but when the direction turned, they refused to believe it. They held on, certain the stock would come back. But once the line of least resistance shifted, the move was over, and nothing could save them. That's why I say the most important skill in speculation is to identify that line and respect it. Not just when it favors you, but especially when it turns against you. The beauty of this principle is its simplicity. You don't need to know why the line is where it is. You don't need to know the news, the inside story, or the fundamentals. All you need is to see how the stock behaves, how easily it moves in one direction compared to the other. That's the market telling you its will. Isn't it easier to follow the will of the market than to waste yourself fighting it? A dull, lifeless market is often the breeding ground for the next explosive opportunity. Most traders can't stand it. They look at a stock that barely moves, and they say it's dead money. They want action, they want speed, they want something that jumps around so they can feel alive. But the truth is, the market never shows its hand in noise. The big moves are born in silence, in boredom, in those stretches where nothing seems to happen. Have you noticed how the biggest runs often come out of stocks everyone had forgotten? That's the market's trick. It lulls the crowd to sleep. It makes them impatient, restless. The tape drags, the volume dries up, and the talk is that nothing will ever happen again. But underneath that dull surface, something is building. Strong hands are at work. They don't chase. They don't advertise. They accumulate quietly while the public yawns. They lay their plans in the shadows, and by the time the move comes, they're already in position. Do you see why boredom can be your best signal if you've got the patience to wait? I used to fall for the same mistake every beginner makes. I thought a dead market was a waste of time. I wanted to be where the action was. I'd leave a quiet stock and run after one that was jumping. More often than not, I lost chasing the noise, and the quiet stock I abandoned. That was the one that made the real move. It took me years of paying tuition to the market before I learned to respect the dull phases. Don't you see the irony? The dullness that drives people away is exactly what creates the spring for the explosion. Picture a coil tightening. At first, you hardly notice it. There's no sound, no movement, but the pressure builds quietly. When it finally releases, it doesn't whisper, it roars. That's the way of a quiet market. It's a coil, winding and winding, while the crowd complains about the lack of action. When the release comes, it catches them off guard. They rush in after the fact, and the professionals sell into their excitement. Haven't you seen a stock that sat still for months suddenly take off like a rocket? Did it feel like it came from nowhere? It didn't. It came from boredom, from groundwork that nobody had the patience to watch. The dull market is also the great deceiver. It tests your nerves, your discipline, your need for action. Most men can't stand still. They'll force trades just to feel alive, even though the tape is telling them nothing. That's why the majority lose. They can't endure silence. But the man who can wait, who can watch without acting, is ready when the silence breaks. Do you have that discipline, or do you let boredom rob you of your chance? I remember watching a stock that barely moved a point for 6 months. Brokers stopped mentioning it. The public had no interest. But I noticed the volume steady, quiet, never absent. Somebody was buying, though you wouldn't know it unless you studied carefully. I waited. People laughed at me for wasting time on a dead stock. Then one day, it started to lift. Not with fireworks, not with noise, but with steady strength. That was the start of a run that carried it 20 points higher. The men who had dismissed it as dull were too late. I caught it, because I understood the secret of lifeless markets. Wouldn't you rather be in early like that, instead of chasing when everyone else wakes up? On the downside it works the same. A stock can drift sideways, looking harmless, even stable. The crowd feels safe. They think the quiet means there's no danger. But under the surface, distribution is taking place. Strong hands are unloading to the unsuspecting. When the selling is done, the stock collapses, and the quiet phase suddenly looks like a trap. Have you ever been caught holding a stock that seemed calm, only to watch it plunge overnight? That wasn't an accident. That was groundwork disguised as dullness. The market loves to disguise its intentions in boredom. That's why you can't judge a stock by how lively it looks today. You have to judge it by its character. Does it hold steady when it should be weak? Does it resist falling when the general market is soft? Or does it sag under its own weight even when everything else is rising? These are the signs you look for in dullness. The quiet tape is whispering its secrets, but only to the man who listens. Are you listening, or are you distracted by the noise of busier stocks? Most traders don't want to hear this. They want constant excitement. They treat trading like a carnival ride. But speculation isn't about thrills. It's about results. The thrills cost money, and the boredom earns it. That's the paradox. The men who chase excitement pay the bills for the men who wait through boredom. Haven't you noticed how the patient traders seem to catch the real swings, while the restless ones are always late and always broke? It takes a certain temperament to love dull markets. You have to remind yourself that quiet is not the absence of opportunity, it's the preparation for it. Every long consolidation, every narrow range, is a message that pressure is building. The direction may not be clear yet, but the move will come. If you've trained your eye, you'll recognize when the character changes, when the quiet resolves into strength or weakness. But if you abandon the stock because it's boring, you'll miss it. Isn't it better to watch quietly than to miss the whole move? The public loves to say, nothing's happening. But something is always happening, even when it looks like nothing. The strongest moves start in silence, because silence allows accumulation or distribution to occur without interference. The public hates boredom, but boredom is the cloak that hides the truth. When you learn to look beneath it, you'll find your greatest opportunities. The tape teaches this lesson over and over. A lifeless market is not lifeless at all. It is alive with hidden activity, with strong hands preparing their play. If you treat it as dead, you'll be blind when it wakes. If you treat it as preparation, you'll be ready to act the moment the mask comes off. Which side do you want to be on when the silence breaks? News always follows price, never the other way around. That's one of the oldest truths in speculation, and yet it's the one the crowd never learns. They sit around waiting for headlines to tell them what to do. They listen to the newspapers. They hang on rumors and tips. But by the time the news is printed, the move has already been made. The smart money doesn't wait for reporters. They act first, and the news comes later to explain what they already did. Haven't you noticed that? You see a stock start to climb, and a week later some headline justifies it. But the rise began long before the ink ever hit the paper. I used to chase news myself. I thought if I got the story first, I'd get the profits. I listened to tips. I read every line of financial columns. I jumped in when I thought I had a scoop. More often than not, I lost. Why? Because the news was old by the time I heard it. The market had already discounted it, acted on it, and moved. That's the cruel joke the market plays on the public. The story you read is never the reason, it's the excuse after the fact. Do you still find yourself rushing into trades after you read the news? The men who make money in this game don't chase headlines. They study the tape. They watch the character of the market. The tape tells the story before the newspapers do. A stock doesn't start climbing on heavy volume for no reason. Somebody knows something. Somebody with money and information is buying. And when they're finished, the press will have its explanation ready for the crowd.